Well, let's get into it. The first news articles from the Denver Post, right where I live. With home sales falling in Colorado, real estate agents will have to fight over a shrinking pie. During the pandemic, thousands of people in Colorado lost or left their jobs and got licensed with the common misperception that being a real estate agent was easy money. But with the high interest rates, sales have fallen by a fifth and are expected to slow even more, reducing the number of agents needed. There are already about 1,000 realtors that have dropped out, at least as being realtors, which is another designation, another layer above being an agent with extra ethics, training and stuff involved. But they were tracking how many people were realtors, and 1,000 have dropped out already just recently. And let's see. Most new agents don't last more than 5 years, and the change in this market is going to make it even more difficult for them to hang on. Well, this is interesting. 95% of commission income for agents goes to the top 5% of agents. There are a lot of agents that don't do many deals or have enough to make a living wage. Companies like Redfin, a quarter of its agent employees, their agents are actually employees, cut a quarter of them, and Compass has had 4 rounds of layoffs since June. Now I know Kim and I are both licensed realtors. And you are too, and
yeah,
Red, you were too. Okay, cool. Then we'll have something to share about this. Anyone want to jump in?
I mean, look, we could talk about this for days, right? I was on a mastermind I'm a part of earlier today, and this guy who's a lender, one of the largest lenders for the investor community in the United States, he does thousands of transactions a year. He did this amazing presentation on interest rates, and he took them from Fannie Mae interest rates over like the last 60 years. And you hear the buzz now about, well, let's get into a 5-1 ARM or a 3-1 ARM, because when the rates come back to normal, I'll refinance, right? Well, do you know what the normal interest rate is over the last like 60 years? It's closer to like 8%. And for the last 40 years, it's been going down. Charlie Munger, who is partners with Warren
Buffett.
Warren Buffett, thank you. I've got Berkshire Hathaway in my head. I was about to say Mr. Berkshire Hathaway. He's basically said that I think that the trend after 40 years is going to turn and it's going to go back up. So what I was, for the last 6, 8 months, 9 months, as interest rates have gone up, I kind of predicted like volume is going to, I don't know what's going to happen with prices, but I know one thing, volume is going to go way down, and volume has gone way down. And even for us, volume has gone way down in the flipping business, and we spend a fortune marketing. I think what will eventually happen, and I don't know if this is 2 months or 2 years from now, is people are going to understand that interest rates aren't going back to normal. If they go back to normal, they're going to go up, right? And I think people are going to, right now, there's so many people that have a 2 or 3% interest rate that aren't moving, because where are they going to go? They're going to double their monthly payment, right? But I think if interest rates continue to stay, people are going to be like, all right, well, I guess I have to sell now, or I'm gonna decide to make that move. And I think we're going to see the normal trend of transactions come back. I just don't know if that's 2 months or 2 years from now.
Yeah, we're definitely seeing a huge shift. Well, maybe not huge, not like 2008, right? They're not predicting that kind of drastic shift, but
you mean shift in what?
Just well, both in,
or you could swing a dead cat on every street and get 5 foreclosure vacant houses. Yeah,
right, yeah,
that's what you're thinking, right?
Yeah, exactly. Thanks, Don. Thanks for bailing me out.
I was thinking you might talk about prices. I mean, that's a whole nother topic. Like in the DC market, in the San Diego market, because I have friends there, it's back to the craziness. It's back to people making multiple offers. It's back to bidding over the price. And if you'd asked me 3 months ago, would that have happened in February? I'd have been like, there's zero chance. But I was wrong, because it's insane.
Yeah, I see that too. I'm in more of the Atlanta market as well. And I just really think that we're going to start seeing it's a function of the interest rate versus purchase price. So, I came across a really interesting statistic that, back when things were really crazy last spring, there were people going in doing $50,000, $100,000 over the purchase price. And with the lower interest rate, when you brought it all down, and looking at, what our average here in Atlanta is between, 350 to 400,000, and you were getting a certain end level payment each month. Even with the interest rates going up, what we're seeing is it's not so much that the market's slowing down, but we're seeing that those 50,000, 100,000 over asking price isn't landing as frequently as it was back then. Actually, more sellers are open to actually either selling at the purchase price or a little bit below. And that end monthly payment is still the same. So I think what we're going to start seeing is people are going to want a certain monthly payment, and the market is just going to have to fit into that. Eventually, we're not quite there yet, but I think we're going to start seeing that.
Yep. And what do you guys think about the topic of the news about agents having to bail or stick around?
I call that every time, every year. That's what I mean. It's just that's the nature of the beast. You're talking about a very competitive market. You're talking about people that, you're right, have a lot of them have pipe dreams that somehow getting a license means that they're going to be able to start making huge amounts of money in real estate. Any kind of competitive, especially commission-based environment, you're always going to have the top 10 get most of the money, and the rest are just going to get crumbs. So, I mean, that's just the way real estate's been as long as I've been there, which has been almost 25 years now. So, no surprise there for me.
Yeah, I know. Like in Colorado, we've got 44,000 agents, 29,000 are realtors. That is a lot of agents for Colorado for the amount of deals that can go around. And I think it's the percentage is like 5 deals per person versus I think nationally it's 6. But if that's all you're doing, that's not a lot to go around.
Yeah, I think the average realtor in America sells like 2 houses a year.
Yeah.
So, and if you look at the volume is because interest rates have gone up and people in those 3% mortgages don't want to go and get a 5 or 6% mortgage. They're just sitting there. They're like, we're going to wait. We're going to wait until the mortgages again come back to normal. But if they wait to go normal, it's going to go up. So I think people, in the next 10 years, there's no one's going to argue that we have a shortage of houses in the next 10 years. So no matter what interest rates are now, I think it's Warren Buffett who says that the 30-year mortgage is one of the greatest investment vehicles ever, right? Because you've got a floor, you know what's going to happen. If interest rates go down, you refinance. If they go up, you're in a great position right now, or forever, for 30 years at least. So I think that waiting to buy, someone once said the greatest time to buy real estate was 30 years ago. The second best time is today or yesterday. I still think that I'm looking at, I divested most of my stuff over the last couple of years, and I'm actually thinking about starting to buy again because prices aren't going to go down. 10 years from now when we have this conversation, I promise you any house you bought today is not going to be lower than it is 10 years from now.
Yep. Just keeps going.
Yeah, I definitely agree on that too. And just on more of the agent conversation, I just think anybody can be successful anywhere. So like you said, that 95% or 90% of the commissions go to the top 5%, go be the top 5%. And if it's not for you, then just go, pivot, do something different. I think a lot of people get into real estate as an agent because they think it's fast money. They think it's easy money. And I think because the barrier to entry is extremely low. I mean, you do have to get a certification test. You do have to pay certain fees. But when you compare it to a college education or some of the barriers to entry in other industries, real estate is very accessible. So I just think, if these agents are willing to hustle, they can be in that top 5% collecting 95% of those commissions. Or if they want to get into real estate investing, that's honestly where I made, a lot, like 90% of my money is in more of the real estate investing. But I'm an agent as well to just start helping people, invest better and helping people buy better.
So through MoneyWise, the Fed screwed up. Real estate billionaire Sam Zell warned that hot inflation isn't going away anytime soon. Here are the 3 shock-proof assets to help protect your wealth. And he names fine art, wine, and of course, real estate being a hedge against inflation. Anybody want to jump in and start off the conversation about why real estate is a hedge against inflation?
Well, I wrote an article in Forbes on that topic, actually specifically why income generating existing construction real estate. So where I lost it all first time, not buying existing construction income producing, but the hedge is pretty clear with rent. Rents tend to grow with inflation. And as long as your debt products are fixed interest, which is biting a lot of people right now, or you've ponied up and paid a rate cap so that your interest rate doesn't take all your cash flow and you can ride out a downturn, then you'll find that in a recessionary environment, your rents can oftentimes outpace your expenses and sometimes grow your NOI. And that can happen as long as your tenants can still pay it. So at one point you have stagflation and maybe you can't continue to raise the rent, but there is hedging on both sides of the coin there.
Yeah, I tend to agree, Patrick. And I mean, you kind of talk about the recession and potentially if the housing market does pull back due to interest rates and you've got fewer people that are actually buying and transacting, they still need a place to live. And then so you could potentially be flooded with renters, very similar to 2008, 2009. That's kind of when I got started in the rental piece. And I was actually able to go shop while everything was on sale. And then being able to, like I said, the market just had this influx of renters. And so they were all good quality candidates. They got themselves into a spot to where they couldn't particularly buy. And with supply and demand out there, supply being low and demand being high from rental perspective, I was able to have more of a choice of higher quality tenants and was actually able to raise the rents through that as well, actually increasing my income quite a bit.
Mm. That's awesome. And Luca, same kind of thing. In 2008 is when I got started. And instead of rentals, what I was interested in, I'm too lazy for that. So instead of rentals, I would rather sell the house on terms, doing a seller finance deal so that I don't necessarily, depending on how you set it up, but I can set it up so that I don't actually own the property at all. So with a rental, you've got, the roof to fix, you've got the toilet to fix, you've got tenants in there. When I do a seller finance deal, I transfer the title over to a homeowner. And then I just collect the payments. So I get all of the income that comes in from the same as a rental, but I don't have to worry about the roof. The toilet's not my problem. And I'm not dealing with tenants. I'm dealing with homeowners. So I agree with what Mr. Zell was saying in the article. I think real estate is definitely one side of it. I would suggest take a look at notes, even some seller finance, and look at that as another hedge as well.
Yeah, I live in that world with seller finance and lease options, and there's pluses and minuses, of course. Which way you go with that, but I know we've got investors, they just want to be hands off, similar to like the note investing, where they just want to carry the note, be the bank, and not deal with those phone calls in the middle of the night.
Yeah, exactly.
What do you guys? So we're talking like rentals or rental income. What do you think about the appreciation in this kind of an environment where we've got materials and labor going up, pushing the value up, and I know a lot of the market's tied to new build. There's indicators with that. You guys have any comments on where that's heading?
Yeah, again, rentals, they cost money to upkeep as well. So you've got the cost in there is for the purchase, and then you've got cost to upkeep that property. That can really eat into your profits. And again, I promise I won't just hijack and say do notes. But that is a factor. I will point out though that the downside of that is you talk about inflation, and with inflation comes appreciation as well, oftentimes. And in the case of notes, that's the downside. And so I want to point that out early on, is that is the downside. So with a rental property, you've got that increasing equity over time. When you own the note, that is a depreciating asset. So that's something that you will miss out on. But laziness has its drawbacks, I suppose.
From commercial property executive, from transactions to interactions, what's next for experiential retail? Did you guys have a chance to read these news items?
I perused through them, but
if you have any comments right off the bat.
So you said what's next? So as far as commercial, you said what's next as far as retail?
Experiential retail.
Okay.
So basically what they're talking about is, online retail has been killing brick and mortar, right?
Yeah, it's booming.
For sure.
So, but there's still a place for brick and mortar, and that's the experience, like a way to really connect with customers and help build the brand through multiple strategies. And it was interesting, they were talking about how even Gen Zers, very connected digitally, right? They still crave and want that personal experiential kind of experience.
Yeah, that's everything pretty much. Yeah, that even in wholesaling and what I do for my mentorship program and mortgage, that personal touch, that personal feeling is everything, because people always like to do business with people who they know, like, and trust. So, as far as retail, I know these big chain stores are not going anywhere, such as, like a Nordstrom or Macy's. But when I do go to the malls and stuff like that, I do see some of these other brick and mortar stores that haven't, like you said, established a big brand. I see them kind of dwindling away pretty much, because everything does seem like it's kind of like online, and, we're going to like robotics and AI and all this stuff right now. Sometimes I feel as though I'm living in the Jetsons. I don't know if I'm telling my age, but I remember it was the Jetsons and the Flintstones. Even how we're sitting there having this conversation now with the podcast, I just feel like it's George Jetson and Mr. Spacely pretty much. So it's like it's got to be prepared for whatever the future brings, pretty much.
Mm-hmm.
Yeah, it's interesting, because I have an office as well, and I've always considering just getting rid of it. I'm like, man, I can just do everything from home now, right? But it depends on the business, right? Like the way I do business, it's like, do I really need to have people come in like in a brick or mortar? And the thing I like about having an office for me that's outside of my home, I'm actually in my home right now, but it kind of gets you in a different mindset. So I think as you hire out people and you grow a company, you got to really take into account, like, having them leave their home and come to a place, does that help them like kind of get more, more synergy and more of a mindset that it's time to work versus stay at home and eat whenever you want?
Now, I like what you're saying. That does make sense, because when I do work from home, it's almost like you take, like, when you're working in your offices, you see I'm in my office. Mm-hmm. When you're working in your office, you probably have like one coffee break or something like that. Sometimes you might even have like one lunch break if you even had time to have lunch. But when you're working at home and you're like in your shorts and all that good stuff, pretty much you have like 10 coffee breaks. You're having like 3 lunch breaks. So it's almost like, because it's like you don't feel like you're kind of being accountable to nothing. So the office feel does make you be accountable, and that's everything.
Yeah. So I think a lot of companies will go back to the brick and mortar just because I think I would have to look at data, right? But I would probably say it's not as efficient to have people work from home.
Yeah. We'll get into that on the Sam Zell article.
Okay.
All right.
Yeah. Yeah. I was taking some notes on some of the experiential stuff, and we're talking commercial retail, right? And none of us are in that space thinking about that from a retailer's point of view, or from the owner that's leasing out to them. But I thought it was kind of cool. I just wrote down different things that people are doing in retail for that experiential part. So creative storytelling, artwork installations, live music, children's events, games, virtual reality, holographic stuff. Yeah, that's kind of the top level stuff.
Oh, virtual reality, yeah, that is
Yeah.
real good. That's jamming right now. The virtual reality, and also I guess you can even see those escape rooms. Have you guys ever been to an escape room?
No, have you?
I have,
Yeah,
yeah.
yeah. I was at one like 3 weeks ago.
I'm glad that I go with people because sometimes I'm like, I don't think I'd be able to figure this out myself.
You can't go by yourself.
Yeah, I'm not going by myself. Yeah.
Yeah.
Just like
Antonio says,
going on the VA, you know.
Antonio says like old school arcades when we were teenagers. I think that's coming back.
Really?
Oh, yeah. Freaking arcades, yeah. History repeats itself, man. 360 degree, everything goes around in a circle.
Yeah. Are you guys going to start wearing leg warmers?
Oh man. Actually, not for fashion. I actually had to get some like spandex legs. I guess they're leg warmers, but spandex because I do jujitsu in the morning. So I'm starting to rock some of those. If that's those little tights, right? That's what leg warmers are. The little tights.
No, they're like more fluffy.
Oh, never mind. I thought leg warmers were like the little spandex stuff. My bad, guys.
You're too young.
Yeah, my bad. I never messed with leg warmers. Yeah.
Yeah, Google. It's just the chicks would wear them. So.
You said ladies was wearing them?
Yeah. From Benzinga, Zillow's ChatGPT plugin, your new AI house hunting assistant, or just another chatty Cathy. I don't know if did all of you guys get a chance to at least skim these articles ahead of time?
Yes.
So you know what that's all about.
Yeah.
Yeah. So this is kind of a free flowing thing. If anybody has comments, just go ahead and jump in. And otherwise, I can kind of prompt you guys. Or
I could jump in a little bit because we are looking at AI in all of our processes on the property management. So we have roughly 5,000 investors that we manage for. And what's amazing is you take some of the human element out of clicking a box, is a home actually has a lake view or ocean view or some of those different features and can pull in a lot of data into one space. And so I think it's a no-brainer that Zillow is doing this. And you can really have some more natural conversations around the house hunting because most people buying a home starts on the internet, and most of the time when they the first agent they talk to is the one they use to buy. And I think this is another thing that's a little bit of a front to buyers, brokers, because you can get a lot of things answered and a lot of data and information about the home and the area. It'll just be interesting in how they put guardrails around that for fair housing and things like that.
Yeah, just to build off that, I think that the AI space in general obviously is moving pretty fast. I had this conversation with my wife just yesterday as our wedding anniversary. So we were talking in the car, and like AI, I think is a really good thing, but it could be really dangerous and really scary as well. So I think this would be a good thing, good use of the tool. ChatGPT is obviously leading the way, I think, with respect to what people are talking about with AI that's available to the population of people. Zillow is obviously a major player in the real estate space. Whether we want it to be that way or not is a different question. Depends who you are. If you're participating, as an agent or someone who's using the tool, or if you're someone who's competing with them, I guess it depends. But I do agree that connecting the dots like that using AI is definitely moving that. It's just inevitable. It's just a question of regulation. Will there be any major governance or not? I don't know. Hard to say.
Yeah,
I agree with both of you guys. I'm going to take the opposite side a little bit, mainly because I'm in the mobile home space. And first of all, Zillow doesn't seem to understand the mobile homes as well. And I don't believe they have a big drive to understand it because there's not a lot of their customers on there. And it's a more complicated topic. I've asked ChatGPT about mobile homes, and it's fairly accurate, but not as accurate as a lot of other things. So that makes it a little more difficult for the people that just want everything done for them, which means those people are probably going to go a different direction and never go to mobile homes because a lot of people just want this box handed to them and everything done. And we all know that business in general is not that simple. And we are usually more successful when we find the piece that most people won't go after. So I do think it's going to make my life a little easier, but not overall. It is going to lessen the competition in my space. I still believe. And I did want to ask ChatGPT what it thought about the Zillow. And then I remembered the data isn't that updated. So I am curious in the future when we have all these competing ChatGPTs, what they think of each other. Just as fun.
Yeah, right.
I've gone down that path with Bard, asking it what it thinks about GPT, and I asked him questions that Google could answer or that Microsoft Chat could answer, and Google couldn't. And it was interesting how that's all going to interact.
Yeah, I know in that article it did point out that it wasn't clear how it's actually going to work on Zillow, because I mean they can kind of get a conversation going about what they want in a property. It might just be easier to just go check the boxes, So we'll see how that ends up working.
It's interesting when you talk about data sets. So Zillow has a ton of data. So there's two types of you're pointing this to. Are you pointing it towards your own data and helping you organize that data? For example, with what we do with our company is we have all these different data points, and we're using some generative AI to pull all that together. So when somebody's on the phone, they can see everything that's happening within a property or a customer or a renter. And then there's pointing it outward and then letting it interpret some information and data. I think that's really hard because we found that it's not accurate. There was a guy who just got in trouble as an attorney who quoted all these case law that ChatGPT just made up. So
wow.
there's a long way to go.